Yeah, with what's coming up, with how you've been trading, I can't see anything changing for you. You've been killing it lately, Jeff. You've been absolutely crushing these trades. Hey, welcome back to the Hub channel. My name is Brandon, and we have another amazing show for you guys today. As you know, we're going to be talking about the past trade that Jeff Beamer has put on. Jeff is our professional money manager, our senior strategist over at the Evo channel, an excellent guy, and he knows what he's talking about. So we're going to want to hear about that. And then we have some top headlines coming out. I don't know if you guys are awake right now, but a lot going on with Bitcoin, the spot ETF, but Jeff's going to be talking about some earnings stuff coming up. And that's going to be something you're going to want to pay attention to. Later in the show, we're going to get into some trade ideas that are coming up for the next couple of weeks. And as we get into earnings, as you very well know, there's going to be more breakouts in the market. So we're going to be playing those with Jeff's new strategy. Ryan, let's go ahead and bring Jeff in here. Jeff, over the past couple of weeks, I know you put on this Phillips Morris trade that people have been playing, and we're going to talk about that right now. But this has been what we call kind of a sideways trade, and the way we play that is with a calendar spread or a butterfly. How has this trade been going for you, Jeff, and what have you been doing profit-wise in this trade, and what advice do you have to people that did get into the trade right now?
Right. Phillip Morris is one of those stocks that began to trade sideways prior to its earnings announcement that's coming up. So we put on a trade called a calendar spread. This is a trade that makes money from a stock going nowhere. In fact, just trading sideways, we can make very nice returns on the stock. In fact, in just 3 weeks, this trade is up 57.1% on risk in just 3 weeks. Now, here's the thing. Normally, I would stick with this type of trade a little longer. When you're between what we call the break evens, you'll see these light blue lines going from the left to the right. There's one on top, one on bottom. Those are the break evens. When we're in between those for this type of trade, I usually stick with it for a little while because we're what's called theta positive. This means we're making money each and every day on the option that we sold because it's decaying faster than the option that we bought. Okay. However, this week, Philip Morris does have an earnings announcement. So I would go ahead and take this off. You could stay through the earnings announcement if you felt that Philip Morris was not going to move very much. But since we're already up over 50% in the trade, we would just take this off, take our profits, and let Philip Morris do its thing through earnings. So great trade, just 3 weeks, very nice return.
I love that trade, Jeff. That was an easy trade to put on. You saw that coming, and with 56% profit, obviously you can't turn away from that. Now, this last week you had a pretty big week in that you launched your new service, and this service is the Delta Neutral Breakout Service, which is a little bit opposite of what this strategy just was. This is a different strategy. This is one that plays to earnings more so and big breakouts in the stock both ways, either way, and you put on trades that help benefit this type of trading style. So what is different about this type of service than what you just did with Philip Morris?
With breakout trades, we look for stocks that are explosive, that are anticipated moving up real fast or down real fast. All right. So when we trade with delta neutral strategies, we do have sideways strategies like the calendar spread, but we also have strategies that benefit when the stock moves aggressively higher or aggressively lower. That's what we call breakout. And we did our most recent trade that we closed out of last Friday was one of those trades. The new service launched and we put on a nice little strangle on a stock that had earnings events. And this stock jumped. The stock was progressive. PGR was the symbol. And as we went into earnings, you can see the stock consolidated for about 5 days in anticipation of the earnings announcement. We put on this trade just 4 days before earnings. Actually, we put the trade on a Monday. Earnings were Friday morning. Okay, so really in the trade 4 days, and boom, the stock gapped up, generated over a 100% return in just 4 days. Now, we are just at the very beginning of a busy earnings season. We put on 3 more trades today. Just today, 3 more trades because there are so many opportunities with this strategy. The strategy that we run is an earnings-based strategy where we find stocks that have anticipation for a big move, and we place certain strategies, such as a straddle or a strangle, on in advance of that announcement. So, Brandon, this is just a great time for this. We have over 5,000 stocks over the next 3 weeks. Over the next 3 weeks, we have over 5,000 companies that declare earnings, and it's just going to be a wild ride.
Well, not only that, but even over the past week that people have been able to sign up, we've already gotten a few people writing in saying how well they've already done just being in the service just a week, which is saying a lot to you, Jeff. That's, I mean, big pat on the back type of thing for you right there. So
Right.
what headlines do we have coming up?
We just had a gentleman write in over the weekend that took that progressive trade and made his subscription back right away. Not only that, but it probably paid for his subscription to our new service for about 3 months. All right. Right now, we're offering a founder's special on it. It's a discounted rate. It's good for a very short period of time. So jump over to the link that appears on the bottom of your screen and get started with us with our new Delta Neutral breakout service, because it has a tremendous track record so far, and we look for that. We anticipate that to continue. So, Brandon, yeah, this is very exciting.
Yeah, I think it is. Headlines this week, Jeff. We have a lot going on. What is cracking in the market and what's going to help move things? I mean, that's not even talking about what happened today. You see Bitcoin jump 10% this morning?
I did. I did. And there was actually some false news that came out about Bitcoin and, a false approval note that got retracted very quickly. And the stock
I don't think it was a
down.
false approval. Jeff, I don't think it was a false. I think it was a false leak. I think it's actually approved, and I just don't think that BlackRock wanted that info out that quickly, because I do think they need to accumulate more Bitcoin for their ETF, because as you know, they need to hold the Bitcoin in reserves for this bad boy. But I think that's what happened more so, and they let those people rein that trade back in. A lot happening over there. Anyway, what's going on in the main market, though?
It's still up. It's still up. I don't have that chart in front of me, but it is up nicely today, and we'll see if it's going to break out of its current range. It's been trading in a range here for a little while. Let's take a look at my chart and start talking about the broader market here for just a few moments, because there's a lot going on with this. Now, interestingly enough, you're looking at a chart of the Spider Index Trust, SPY. And we've been stuck in a tight range here for the past week. Not much has happened since I last visited with you a week ago. We had we were threatened with a downward move, but today we're up about 1%. And I honestly, if I put moving averages back on, we've jumped above my short-term moving average. But really, it's that 440 mark that we are concerned about. If we finally break out and close nicely above 440, I think we could make new highs by the end of the year. However, there are a lot of dark clouds overhead. And, if we can't break out, and earnings season is one of those big catalysts that can drive the market, it can move the market, and we can see things going higher or lower because of all these earnings announcements. So it's an interesting time, and it's almost, you could almost place a bet either up or down on the Spider Index Trust in anticipation of a big move, because we could see it here coming up. Now, I often like to put on my Hike and She candles here, and let me just zoom in on them a little bit, because here's the warning sign. This is part of the black clouds technically. I call it when the candles get wicky. All right. Now on the downtrend, you see these solid red candles that have no wick on the tops. And then all of a sudden, we see smaller candles with wicks on the tops and the bottoms. And all of a sudden, the trend changes. Well, we had this short little pop, got up to resistance here at 435, but look what's happening. We're wicky once again. That does concern me as far as if you're a bull, just be very careful. Keep your exits tight, keep your stops tight, and be prepared for a drop. Otherwise, we break above 440, we're off and running to new highs. Now, other markets have reacted nicely as well. The NASDAQ, the Qs are up 1.13% today. Let me show you with a real candle here. We're off those lows. We're above my short-term moving average, but we're at our own area of resistance, which is 370 on the Qs. Now, again, earnings will dictate where these indexes move. Now, for a while here, the trade was long NASDAQ, short IWM, which are the small caps. So if we look at IWM, it's done exactly what we anticipated it would do. We anticipated several weeks ago that we would rally, which we did. Didn't quite get up to where I forecasted, which I thought was going to be about 180. Okay, but we did drop back down, and we are bouncing off of this 170 level. It shows that it is pretty significant support. But remember, I had drawn these this pattern here, essentially this ABC pattern, with the stock dropping to maybe 165. Now, the reason I targeted 165, well, quite frankly, when the data comes in here, you'll see that that's major support for the small caps down here at 165. Now, if we do break this 170 level, it's a short trip down to 165. However, if we drop below 165, as my good friend Rob Roy says, Katie bar the door, we could drop significantly. There is literally no additional support until we get down to maybe 100, which is what one of our viewers said within the past week or two, that yes, it could, it's a long drop to the next major support level on IWM. Now, on this show,
what did you say? What did you say it could get down to? What was the potential?
100. 100.
No. Yeah, I see that on the chart. Looking at your chart, seeing that, but we thought obviously 160 was a huge. Oh my gosh, that would be one of those Katie bar the door situations, just like Rob says.
It's just like Rob said. I mean, that is. When that came up, both Rob and I were like, no way. But yes, technically, it's a long way down to major support. There is some what we call intermediate and minor support along the way down. But man, let's just hope 160 holds. But in the short term, we are trailing the short. They're up a little bit today. They're outperforming today. But the trade of long NASDAQ, short IWM, that's been the trade that's been on for quite a while and still exists. So looking at some other sectors here real quick, interestingly enough, energy, USO is down 76 basis points today, but energy is one of the leading sectors here over the recent period. I'll show you more about that in just a few moments. But interesting that USO is up, crude oil is up, but energy prices at the gas pump are dropping. I noticed a national average has come down a bit. In fact, at my local gas stations, we've dropped below $3. Sorry, California, and other places. But we're well below $3, and that's pretty significant because we were holding there for quite a while. Now, so we'll see if energy continues this bull run. I think the unrest in the Middle East, conflict with potentially Iran, Saudis holding tight on their production rates, we could see energy and crude oil continue to run and hopefully not hit 100, but I mean, we could definitely see crude oil going back up towards 100 if we're not careful. Another market that we've talked about in the past are home builders, and that is XHB. There's a lot of headwinds here. I'll talk about why in just a moment, but we're holding on at the last bastion of support here, which is our long-term moving average. Otherwise, we could see a drop down here to this pivot point right down here, and we could see pretty much $70 pretty easily through earnings season. So depending on how the home builders report, we could see XHB continue to drop and drop down to 70. That's the trade that I would be wary of right now. Now, what I'd like to wrap up with our broader market look is at interest rates. Now, the bonds and interest rates. Now, TLT, which is the long end of the curve, that's the 20-year plus Treasury. We're down pretty big today, 1.61%, which means interest rates have popped. Okay. Now, I was doing some research earlier today, and actually my jaw just kind of dropped. And that's because it wasn't because of interest rates on the 10-year popping necessarily, but it was what was happening on the short end of the curve. Now, the SHY, which is the 1 to 3 year Treasury bond, it's down a little bit today, okay? About 0.6%. Very little compared to TLT, the long end of the curve. But if we bring up the graphic that I have of the recent Treasury note auction, this is what caught my attention. Take a look at a 4-week, which is right in the middle there. A 4-week Treasury note is at 5.436%. Over almost 5.5% to hold your money in U.S. Treasury notes for just a month. For just a month. The 13-week, which is obviously about 3 months, okay, that's at 5.5 already. Just amazing that if you are holding cash, there's no better place right now than on the short end of the curve. And as long as you keep your note to maturity, you'll get the full amount. You'll get the full amount backed by the full faith and credit of the U.S. government. Okay, that is just amazing to me. Now, as fast as the 10-year is running up, man, the fact that the real short end of the curve is well above 5% is jaw-dropping to me. I mean, this used to be, you didn't get paid on this at all. I remember 0.18% on holding cash in a brokerage account not too long ago. And now you should be getting over 5% on your cash that's being held in any type of account. Pretty close to 5%, if not 5%. And then if you actually buy the Treasury note itself, then you get over 5.5%. So, Brandon, let's take a look at the rest of the sectors. Now, what I wanted to do was bring up a chart of the last month's performance of all the sectors, well, the broad sectors. Now, because when you have interest rates on the short end of the curve at 5.3% or 5.5% for holding your cash for a very short period of time, this sets you up very nicely because you can then really pick and choose the sectors or the stocks that you want to invest in. Because remember, they've got to perform better than that, quote, risk-free rate, okay? And here over the past month, what you're looking at is a 1-month return on the different sectors. Now, energy has really come off the lows. They were the lagger there for a little while. Over the past month, the sector is down 2.92%, but over the past 5 days, which I don't have shown here, this has really run higher, okay? So these sectors you can see have been really, healthcare and technology have been doing, pretty strong. Communication services been doing pretty strong. But interestingly enough, when the market goes down, people often look for defensive stocks. Defensive stocks are usually things in the defense sector, in the sin stocks. By the sin stocks, we mean stocks like Phillip Morris, okay, or the gambling stocks like Wynn Casinos, etc., or in utilities. And you can see here over the past month, utilities have been one of the absolute worst places to be, which has really got people confused, because when you're in this type of environment, the market's pulled back a bit, we have high inflation, you would think that certain sectors should be and shouldn't be doing well. And right now it's been flipped on its head. And it's just, you really got to focus on your charts and let them tell you which way the market's going right now. It's critically important, because some of those old adages are not coming true right now. One of which is, for example, high inflation, the tech stock should be dropping. Well, that's not happening. Excuse me, high interest rates. With high interest rates, tech stocks should be dropping, and that's just not happening. Okay, we're seeing them do very, very well. So, like I said before, the big news of the week are earnings. And we have over 5,000 companies declaring earnings. This week, we have a little over 300 stocks declaring earnings. And there are some notable ones in here. Okay. Now, last week, probably one of the more notable ones was JP Morgan in the banking and finance sector. Okay. So starting tomorrow, you're going to have State Street and Citizens and Ally, or those are Wednesday. Sorry, tomorrow's Bank of America and Bank of New York Mellon and Interactive Brokers, and then Wednesday you have First Horizon, Ally, U.S. Bank, and NASDAQ. I mean, just some big finance and banking names having earnings throughout the week this week. There is one error on this page that I'd like to direct your attention to, in case you like to take a snapshot of this and hold it. On Thursday morning, okay, so look at the Thursday column on the left-hand side. Towards the bottom, you'll see the symbol FCX, okay? And below it, it says Invesco. No, FCX is Freeport-McMoRan. They're the ones that declare Thursday morning. I'm not sure why they put Invesco there, but that is clearly a mistake. But I just wanted to clarify in case you ever were looking at this. Sometimes data is incorrect, so always verify, double check. But this is, I did find an error, and this is not something that I put together, okay? A third party puts this together. So that was the one error on this page that I saw that I thought I'd bring your attention to. All right. Now, out of all these earnings, again, there's over 350 companies that are declaring earnings this week. The sector that I would focus on probably is banking and finance. Just with all of those names that are about to declare, you have Goldman Sachs. I mentioned Bank of America. I mentioned BNY Mellon. Okay, Interactive Brokers, Morgan Stanley, NASDAQ, the exchange, Northern Trust, State Street, Key Bank. I mean, you can see on the list, all these names, all these little household names in the banking and finance industry are declaring this week. And it will be really interesting to see if this sector can propel the market higher or not. Is the current state of the economy making the banks money, or are they losing money? Okay, that will be the story that's being told right now. So, Brandon, out of that group, it's hard to narrow down. I might be trading all of them this week. But
can't narrow it down, Jeff.
Our new service, we have picked a couple out of that list for our service this week, our breakout service. But if you're not familiar with how to really trade a straddle or strangle, we do have a guide that is free that you can download and learn about trading this strategy around earnings. And I show you exactly how I do it, exactly the steps to take. Just go to ewotrader.com/straddle and you can download the guide and learn about this powerful strategy. Now, the discounted monthly rate on our new service won't last long, okay? But probably halfway through this earnings season, it'll change to the full subscription price. But at least today you can download that guide and learn about it, and to see if this is something that fits your trading style. So, Brandon, lots going on. I mean, it's just been a busy Monday already, and
Yeah, I
we'll
mean,
see how the rest of
well,
the week goes.
with what's coming up, with how you've been trading, I can't see anything changing for you. You've been killing it lately, Jeff. You've been absolutely crushing these trades. We appreciate you coming back to the channel, obviously, as always, helping us out and helping us navigate this fun little market that we're having with these
Yeah.
trade ideas that you're giving. It's just gives us so much ammo to make any trade in pretty much any environment. So this works out for everybody's a win-win. And if you guys are enjoying these videos, by all means, go ahead and like and subscribe to the channel. We would love to see you back here every single week. We have more shows where we have more guests come on and talk about everything going on in the market. And you're not going to want to miss out on any of those. Jeff, thank you so much for coming to the channel today. And we'll see you guys all in the next one.